Here's some good news for individuals that work in occupations that customarily and traditionally receive tips. Hi everybody, it's Dr. McMillan, a public health doctor, and earlier this year in January, a law was passed that allows individuals to deduct up to $25,000 from their federal income tax based on tips they may have received. This new deduction is only eligible for individuals that work in occupations that traditionally and customarily receive tips based on an IRS list from 2024. Here's a fun fact about post-Civil War and Reconstruction era as it relates to tipping. After the Civil War, industries like restaurant industries and railroad industries, they did not want to pay individuals that were formerly enslaved. So they made it so their particular salaries or compensation was based on the tips that they received from customers. In 1938, the Fair Labor Standards Act was set, which set the first federal minimum wage, but it allowed exceptions for tip workers. And what this did was actually institutionalize the practice for individuals in these occupations to rely on tips instead of a fair standard wage. These tips ended up making up their income, and this still goes on today. So here are some important things to know about this deduction. First, it only applies for tips that are reported through your payroll. Secondly, your tips will still be subject to payroll taxes, that is Social Security and Medicare. There are income limits on who can apply for the deduction. If you're a single filer, that income limit is $150. If you're a married filer, if you're married and you're filing jointly, that income limit is $300,000. Unfortunately, if you're married and you're filing separately, you're not eligible for this deduction. This tax deduction is eligible for the tax years of 2025 through 2028. Congress has the option to extend this. If they do, I will let you know. Health policy to the people. Stay safe.